Good morning. You're watching Businessworld live here on One News. I'm Jess De Los Santos. It's the start of a new trading day, but first, let's go straight to our top story. The net inflow of foreign direct investments soared to a 19-month high in July. FDIs jumped by 52% to $1.63 billion in July from $831 million a year ago. That's according to data released by the Bangko Sentral. The July figure is also higher by half than the inflows recorded in June and the biggest since December 2019. In the 7 months to July, FDI inflows increased by 43% from the same period last year to a little over $5.56 billion. Economists said the higher inflows for July could be attributed to the improvement in real sector activity on the back of easing quarantine restrictions. Analysts hope that FDI inflows will become better in the coming months amid the improvement in the COVID-19 situation in the Philippines and abroad. But it's not only FDIs that posted an annual increase. Fresh data from the PSA showed that exports rose by 17.6% to nearly $6.46 billion in August. This was a turnaround from the contraction recorded in August last year. However, month on month, the actual figure slightly fell from more than $6.48 billion in July. Manufactured goods continued to comprise the biggest chunk of total exports at nearly 83%. On the other hand, imports jumped by more than 30% to $10.04 billion year on year in August. Trade deficit narrowed to $3.57 billion in August from about $3.66 billion in July. Now, despite the increase in FDIs in July, the Philippines is one of the least attractive destinations for foreign direct investments in the Asia Pacific. That's according to Oxford Economics. The think tank said the country continues to have poor infrastructure and business environments. Because of this, the Philippines ranked 13th out of 14 Asia Pacific economies in FDI attractiveness, ahead only of Taiwan. Specifically, the country received low scores in quality of infrastructure and logistics, political and business climate, and market size and potential. Oxford Economics said this poor ranking adds weight to its forecast that the Philippines will experience deep economic scarring from the COVID-19 pandemic. Okay, 5 minutes into the trading day, and you see in this chart right here with me, you have the PSEI continuing gains that we saw on Monday so far. The main index has increased close to 0.4%, maintaining its rally above 7,000, now at 7,150. That's on the back of big economic data today. Again, FDI on a 19-month high in July, surging 52%. Trade likewise, you have exports up 17.6% year on year, and imports also increasing by more than 30%, narrowing trade deficit to $3.577 billion. Again, on a Monday, we saw shares reach a 4-month high here, up by 3.1% to 7,124. That's amid a downtrend in COVID infection, sparking hopes of further economic reopening. This is the capital, might be low risk from the pandemic by the end of the month. Current pilot implementation, of course, of the current alert level system will lapse on October 15. It remains to be seen what the next decision of the IATF will be. But again, so far, you have investors cheering on those developments. Again, the index so far into the trading day is up by 0.4% to 7,155. Now, yesterday, of course, we did see banks and property players having a field day on the main index. Let's see if they maintain that rally so far in Tuesday's trade here. You'd see here a number of property players already making big gains. Megaworld is so far the day's best performer, up 2.7%. Likewise, you have other property players here. Ayala Land also enjoying gains, increasing by 1.1%. Also, yesterday we saw banks gaining big time. Can't say the same for today. However, you still see a number of them enjoy being in the positive territory here. You have the likes of BDO up over Security Bank, yesterday's best performer, is one of the few stocks bucking the rally today. It's down 0.4%. SM Investments, likewise, the day's biggest drag so far, at least down 0.8%. Now, outside the main index, you have to check at our oil players here. One thing, of course, you have to be keeping an eye on. They are set, of course, or they have already at least jacked up pump prices today. Another big time price hike here for our oil players here. Other than that, you also have Petron completing the sale of its fixed rate bonds worth 18 billion pesos. That includes Series E bonds due 2025 and Series F bonds set to mature in 2027. Proceeds of that will be used for the redemption of Series A bonds to finance in part their power plant projects and the payment of existing debt. You can see right here the performance of our oil players here. Shell so far looking unmoved here so far in the day. Priced in still at 21 pesos and 85 centavos. Phoenix Petroleum likewise still at 11 pesos and 70 centavos a share. Petron, however, continuing to experience gains here. It is up by 2.5% at 3 pesos and 63 centavos a share. Phoenix Petroleum down 2%. Again, Shell looking flat still so far, 9 minutes into the trading day. Now, still on that news, transport groups are now pushing for a fare hike as oil firms raise gas prices for a 7th straight week. Dale De Vera has the rest of the story.
The series of oil price hikes has been a burden for jeepney drivers like Roger. Take-home earnings have been reduced to 300 pesos a day from 800 previously.
Napakamahal ng mabilihin. Tapos ganun-ganun na lang kita namin. Pinigiling lang namin yung sana, wag naman itataas yung gas eh. Kasi yung gas, doon malang kinikita namin, napupunta.
Since January, prices of gasoline, diesel, and kerosene have gone up as much as 16 pesos per liter. That's bound to go higher. Oil firms jack up prices once again at more than 1 peso per liter of gasoline, diesel, and kerosene. This marks 7 straight weeks of increases due to tightening supply. Pasang Masa is now calling for a fare hike to at least 13 pesos.
Ito po isang bagay na dapat maunawaan din nila dahil hindi na po kaya, halos hindi na kaya na mamatay na sa gutom ang pamilya ng tuber.
But consumer group Laban Consumer says this will be a burden, especially for minimum wage earners.
Mahirap yun kasi you're talking here of 3 pesos. Kumbaga, di bale kung point A to point D ang lakbay ng isang pasahero kung 2-3 beses siyang magpapalipat-lipat para makarating sa pupuntahan niya.
The group is also expecting prices of goods to increase due to the oil price hike as delivery charges will increase. To temper the hike, the group calls on government to halt the implementation of excise tax as prices continue to rise. For News 5, Dale De Vera, Beer One News.
Here are other headlines we're keeping our eyes on. Vehicle sales dropped 12% year-on-year in September, though month-on-month sales showed an improvement. That's amid easing lockdown restrictions. A joint report from CAMPI and TMA showed over 21,000 vehicles were sold in September. That's already a 35% increase from the vehicle units sold in August. But year-on-year, it's still 12% down. That's as passenger sales declined by 23% year-on-year, while commercial vehicle sales slipped by more than 6%. Toyota Motors Philippines remained the sales leader this year with more than 92,000 units sold in the first 9 months of the year. The Labor Department says it has generated more than half of its job generation goals under the National Employment Recovery Strategy. As of August 21, DOLE has already generated more than 780,000 jobs for both the public and private sectors. Labor Secretary Artugade said, Labor Secretary Silvestre Bello said most of which are from the construction sector, while the rest are on public administration services and IT related. Recall that the nurse program started its operations last May in an effort to precipitate the recovery of the labor market. The strategy will be implemented until 2022 in response to the effects of the COVID-19 pandemic. President Rodrigo Duterte touted the drop in the average weekly COVID-19 cases in the country in his latest speech. Duterte credits this development to the ongoing vaccination rollout that has so far provided almost 50 million doses of COVID-19 vaccines. Duterte also said that 23 million Filipinos have completed their doses. However, the chief executive also took responsibility for the vaccine procurement issues the government had to face at the beginning. Meanwhile, Malacanang also said that Metro Manila has a high chance of being downgraded to a more relaxed alert level this month. That's because of the lower COVID-19 infections in the past weeks and full vaccination of more than 75% of the region's target population. Recall that Metro Manila remains under Alert Level 4 until Friday, October 15. If NCR downgrades to Alert Level 3, more businesses would be able to serve more clients due to an increase in the allowed operational capacity. Now, COVID-19 cases continue to decline in Metro Manila as the country's caseload drops to its lowest in 2 months. Does this mean we'll finally have a better Christmas this year? Greg Gregorio reports.
The health department continues to see a downward trend in the number of COVID-19 cases. At its peak in early September, data shows a 4,000 drop in the 7-day moving average of the daily new cases nationwide. As for NCR, less than 2,000 daily new cases were recorded last week. That translated to positive progress in hospital utilization rate, both for ICU and non-ICU beds. At the national level, ICU bed utilization is still at a high risk, but the utilization of non-ICU beds are now at the safe zone. Only 3 regions are now at high risk. NCR and 7 other regions are now under moderate risk. 6 others are under low risk.
Nakita na ho natin na kaya natin lahat pababain ang mga kaso kahit na gaano ka-dangerous ang variant na meron tayo ngayon.
And even with the additional 411 cases of the Delta variant, the Octa Research Group says the downward trend may mean victory over the Delta variant surge.
Tingin nga natin ito na yung patapos na yung Delta variant. Hindi pa ubos yung Delta variant, pero kumukonti na sila.
Professor David likewise noted that Metro Manila may be classified as low risk in the next weeks, adding that the alert level 4 may be de-escalated come October 16.
Nakikita natin ay tuloy-tuloy na yan hanggang Pasko at magiging maligaya na sana ang Pasko natin. I mean, yan yung inaasahan natin.
The DOH issued projections should the alert level system be de-escalated. According to the DOH, Metro Manila may see a higher number of daily new cases should it be placed under alert level 3, compared to what the numbers could be under a status quo alert level 4. Still, the DOH shares the same hopes for a better situation come Christmas. For News 5, Greg Gregorio, we are One News.
Now overseas, Taiwan has pushed back against China just a day after Chinese President Xi Jinping called for a unification. More of this on this quick take from Bloomberg.
我们会持续充实国防，展现自我防卫的决心，确保没有人能逼迫我们走向中国所设定的路径。因为中国所设定的路径里头，不会有台湾的自由民主的生活方式，更不会有2300万人的主权。 我要重申，台湾愿意为区域的和平发展贡献一己之力。在两岸关系上的立场，我们善意不变，承诺不变，维持现状就是我们的主张。我们也会全力阻止现状被片面改变。
以和平方式实现祖国统一，最符合包括台湾同胞在内的中华民族 整体利益。
我们期待两岸关系和缓，我们不会冒进，但绝对不要认为台湾人民会在压力下屈服。
And that's a first look into the business day this Tuesday, October 12, 2021. Catch Business World Live for the market close at 3:15 p.m. Later today, I'm Jess De Los Santos in VR1 News. Mask on, wash hands, and stay safe, Philippines.